In this video we are going to talk about monthly dividend ETFs. So before starting this video, please like this video and subscribe to our channel for future updates. Monthly dividend exchange-traded funds, ETFs, can provide you with a consistent income source. One buy order is all that is required instead of manually purchasing a basket of dividend stocks. Then you'll start earning money month after month. The income from the greatest dividend ETFs grows over time. Each fund's firms continue to provide value to shareholders. When you buy a basket of equities through an ETF, you get instant diversification. If one company falters or even fails, the other should pitch in to assist reduce the loss. And, as previously said, the monthly dividend income should increase over time. With the exception of a few short-term setbacks such as individual corporate blunders and recessions, this is the case. Overall, stock market investment has shown to be one of the most effective strategies to build long-term wealth and income. That's why, over the previous decade, I've looked into thousands of investment ideas. The following 10 high monthly dividend ETFs offer dividend yields of more than 5% and should provide consistent monthly income distributions to supplement any investment portfolio's capital growth plan. Number 10. VanEck Vector's Fallen Angel High Yield Bond ETF, ANGL. This fund aims to match the ICE BOFAML US Fallen Angel High Yield Index's price and yield performance. This index includes below investment-grade corporate bonds denominated in US dollars, issued in the domestic market, and rated investment grade at the time of issuance. The total assets of the fund's 195 holdings total more than $1.2 billion. Nearly 75% of the interests are in the United States. The majority of the remaining holdings are in Italy, 6.7%, the United Kingdom, 6.6%, Japan, 5%, and Germany, 4%. Over the trailing one-year period, the fund's current forward dividend yield of 5.42% contributed roughly 60% of total returns. The 3-year total return was 19%, and the 5-year total return was over 35%. Number 9. iShares 0 to 5-year High Yield Corporate Bond ETF, SHYG. This bond ETF aims to mirror the performance of the market iBoxx USD Liquid High Yield 0 to 5 Index, which includes high-yield corporate bonds denominated in US dollars with remaining maturities of less than 5 years. The fund had 636 individual holdings as of November 1, 2019, with a total asset value of about $3.3 billion. More than half of total assets are made up of stocks from the consumer goods, 26%, communications, 20%, and energy, 12%, industries. Over the trailing 12-month period, the fund's current dividend yield of 5.47% was paired with capital gains to produce a total return of roughly 7%. Over the last 3 and 5 years, total returns have approached 16% and 20%, respectively. Number 8. SPDR Portfolio High Yield Bond ETF, SPHY. The product aims to produce investment returns that, before fees and expenses, are broadly comparable to the ICE BOFAML US High Yield Index's price and yield performance. The fund's assets, which total more than $80 million, are nearly entirely made up of corporate bonds from just 3 industries. Industrial, 88.14%, finance, 8.92%, and utilities, 8.92%, are the top 3 industries, 2.74%. Furthermore, almost 80% of the underlying bonds' maturities are between 3 and 10 years. The current monthly dividend disbursements equate to a forward dividend yield of 5.55%. Investors received a total return of approximately 10% during the previous 12-month period, and a total return of 19.5% over the previous 5 years, including the fund's share price rise. Number 7. iShares Preferred and Income Securities ETF, PFF. This ETF aims to replicate the performance of an index made up of preferred and hybrid securities denominated in US dollars. This ETF had more than $16.8 billion in assets under management as of early November 2019, split over 480 unique holdings from 8 countries. The great majority of the holdings were in equities situated in the United States. Nearly half of the fund's securities are bank holdings and other diverse financial instruments. The fund's current dividend payouts yield 5.6% and have resulted in a total return of 9.5% over the last year and 21% over the last 5 years when paired with asset appreciation. Number 6. Invesco KBW Premium Yield Equity Right ETF, KBWY. This fund tracks the KBW Nasdaq Premium Yield Equity Right Index's composition and performance. The fund typically invests at least 90% of its assets in small and mid-cap equities rights with competitive dividend yields that are publicly traded in the United States. Total net assets of more than $320 million across 29 individual holdings as of November 1, 2019. The fund's most recent monthly payout, which occurred at the end of October, was roughly 12% higher than the prior period. The current annualized dividend payout amount equates to a dividend yield of 6.01%. Dividend payouts accounted for the majority of the fund's 7.4% total return last year. Over the last 3 and 5 years, the fund has provided total returns of 18.3% and 37%, respectively. Number 5. First Trust Multi-Asset Diversified Income Index Fund, MDIV. The Nasdaq U.S. Multi-Asset Diversified Income Index SM is the fund's primary benchmark. The total net assets of the ETF are distributed. As of November 1, 2019, the company had a market capitalization of more than $735 million. Over 125 separate holdings. Its assets are divided into 5 categories: dividend-paying stocks, real estate investment trusts, REITs, preferred securities, master limited partnerships, MLPs, and high-yield corporate debt ETFs are all examples of dividend-paying stocks. Each has a stake in the assets ranging from 18 to 22.7%. The fund now pays a 6.07% dividend, which when paired with asset appreciation, yields a total 1-year return of 9.8%. Number 4. VanEck Vector's Emerging Markets High Yield Bond ETF, HYM. This ETF's performance goals are based on the ICE-B of AML Diversified High Yield U.S. Emerging Markets Corporate Plus Index. The fund invests in non-sovereign developing countries issuers that are rated below investment grade and have bonds denominated in U.S. dollars. The fund's entire net assets of $312 million were distributed among 603 separate holdings as of October 30, 2019. HYEM's top 4 countries have received investments. China, Brazil, Turkey, and Argentina together make up little more than 30% of the fund's entire assets. The fund's 6.16% dividend yield and modest asset appreciation resulted in a combined total return of nearly 10% over the last 12 months and more than 21% over the last 5 years. Number 3. Global X Super Income Preferred ETF, SPFF. Unlike the DIV, which focuses on U.S. equities, the SPFF invests in 50 of the highest-yielding preferred companies in North America. SPFF is a mutual fund that tracks the S&P Enhanced Yield North American Preferred Stock Index and has over $200 million in net assets spread over 50 holdings. Equities account for more than 2/3 of total assets in the financial industry. The top 3 industries, which include real estate and energy, account for roughly 90% of assets. The fund presently pays a 6.28% dividend, and its share price has risen about 7.5% since its 52-week low in December 2018, resulting in a total return of more than 11% over the last 12 months. Number 2. JP Morgan Emerging Markets Local Currency Bond ETF, EMLC. With roughly $5 billion in assets under management, the ETF aims to mirror the price and yield performance of the JP Morgan GBIM Global Core Index as precisely as possible, before fees and expenses. The index includes bonds issued by emerging market governments that are denominated in the issuer's local currency. The top 10 current holdings of the ETF account for 13.4% of the fund's total assets. Almost all of the assets, 99.4%, are in government-issued securities, with a small portion of the assets in private sector securities in the industrial, finance, utilities, and energy sectors. Brazil, 10.09%, Mexico, 9.39%, and Indonesia, 9.26%, are the top 3 nations represented in the fund, accounting for over 30% of total assets. With a current yield of 6.38% and a rebounding share price, the fund has delivered an 11% total return over the last year, which is better than the 7.8% total return during the previous 3 years. Number 1. Invesco CEF Income Composite ETF, PCEF. The S-Network Composite Closed-End Fund Index SM is tracked by this fund. In general, the fund invests at least 90% of its total assets in securities of funds that are part of the index. The fund is a fund of funds, since it invests in common shares of funds that are part of the index rather than individual securities. The PCEF fund had roughly $770 million in total assets allocated across 136 unique holdings as of November 1, 2019. The top 5 holdings account for only 12.6% of the fund's total assets, and the top 25 holdings account for less than 45%. Since its 52-week low in late December 2018, the PCEF share price has increased by more than 17%. The fund had a 13.2% total return over the last 12 months, with a forward dividend yield of 7.21%. The top 10 monthly dividend ETFs listed above are ranked entirely based on their current forward dividend yield. Investors should undertake their own due diligence to ensure that other measures such as share price trend, payout ratios, long-term and short-term total returns, and so on, support their portfolio strategies and that they choose their investment stocks properly. What are your thoughts on our video? Have you invested in any monthly dividend ETF? Please let us know in the comments section below. If you enjoyed this video and would like to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.